Everyone is telling you Palantir is the next moonshot, but the technical data is telling a completely different story. While price targets are being raised, my Wyckoff analysis has just flagged a major distribution phase that most retail investors are completely missing. In this video, I'm going to show you why the smart money might be leaving the building and exactly what that means for your PLTR position in 2026. We caught the $207 price target months ago. Is Palantir about to crash? Or is this just a pit stop? I will explain by using leading indicators like volume and price action rather than lagging signals like moving average, relative strength index, and many others. Today, we are seeing a massive divergence between retail FOMO and institutional selling. I'm breaking down the three core Wyckoff principles you need to know right now to protect your gains and avoid the distribution trap. We explore the three core principles of Wyckoff: demand versus supply, cause versus effect, and effort versus result to determine if Palantir's growth potential is reaching a temporary exhaustion point. Whether you are a long-term investor or a short-term trader, understanding these market phases is critical for your portfolio. Before we jump into the charts, if you want to master the markets and trade like a pro, hit that subscribe button and turn on notifications. If you find this analysis helpful, please drop a comment below with the word Wyckoff or ask a question. Your engagement helps the YouTube algorithm push this video to other retail traders who need to get this awareness and systematic approach. Let's help the community grow. Now, let's open up the charts and get to work. If you have not familiar with Wyckoff, I would recommend to watch my educational videos mapped to this in the YouTube card. My analysis is based on the Wyckoff methodology, a structured technical analysis framework established by Dr. Richard Wyckoff in the early 1900s. Unlike lagging indicators such as moving average, RSI, or others, Wyckoff focuses on leading indicators, daily price action, and volume. The methodology relies on three core principles: demand versus supply. When demand exceeds supply, prices rise. When supply exceeds demand, prices fall. Cause versus effect. A period of range-bound price action, the cause, builds the momentum for the next trend, the effect. Effort versus result. We look for harmony between volume, effort, and price movement, result. Divergence here often signals a trend reversal. Let's get the historical context of Palantir stock from the chart 2020 to present. To understand where Palantir is going, we must look at where it has been. 2020 to 2021. Following its inception mid-2020, the stock saw an initial markup, followed by a distribution range that lasted through late 2021. 2022, a significant markdown occurred, leading to preliminary supply and eventually a selling climax at approximately $6.44 in March 2022. 2022 to 2024. Accumulation for nearly 2 years. Smart money accumulated shares in a tight range between $6 and $10. During this time, supply was exhausted, evidenced by low volume at price lows. 2024 to 2025. Markup and reaccumulation. A new uptrend began in mid-2023. We saw a reaccumulation phase from late 2024 through April 2025, after which the stock surged toward recent peaks. Today, I'm mostly talking about the accumulation area. We want to know what the price of this stock was computed to be based on the second principle of Wyckoff, cause versus effect. In February 2024, I was updating my price counts, and very recently my last update was in May 2025. The total accumulation campaign count I computed was around the $196 to $212 range. For the whole accumulation range, the highest possible count I got was around $196 to $212. I also have a reconfirmation count for the reaccumulation area, shadowed in blue, which confirms the price is around $164 to $297. If you look at where the price touched, it reached exactly $207 at the peak in November 2025. The stock is currently showing all the signs that smart money is distributing. When we do this analysis, we also need to look at price action versus volume. On the volume histogram, I have put blue arrows to compare it with price action in the uptrend. Whenever the arrow is upsloping on the volume side, the price is also going up with high volume. In every impulse movement, we see higher highs in volume. Volume is in harmony with price action. What you see here in the chart, starting from mid-September to October of 2022, the price for Palantir stock was around $8.90. This is a weekly chart, so every white price bar you look at is a bullish day and the red color is a bearish day. Similarly, in the corresponding volume at the bottom, every gray color is volume on a bullish week and the red histogram is volume on a bearish week. Starting from the September-October timeframe of 2022, the stock went up. This was basically a markup that lasted until almost the end of 2020. Then the distribution started for the stock. Distribution is basically range-bound price action. That distribution was happening through 2021 until somewhere around November. Then the markdown started from November 2021 until the end of February 2022. There, preliminary supply happened, and then a selling climax reached $6.44 in March 2022. The stock then went into accumulation for almost 2 years. During this accumulation phase, the price was range-bound. Smart money was accumulating the stock in the lower price range of $6 to $10. After this accumulation, a new uptrend began somewhere around mid-June or July of 2023. The stock went from $7 or $8 to reach its peak around $63. That was the markup. Later, one more reaccumulation started from the end of November 2024 until April 2025. This was again a reaccumulation in the markup, and then the stock left the reaccumulation. Very recently, if you look, it is going through distribution too. Any Wyckoff analysis is done based on these basic market phases. We have the markup, uptrend, distribution, markdown, accumulation, markup again, reaccumulation, and now we are in distribution. This logically gives a cyclic, classical way of looking at price action in a waveform over the last 5-year timeline. I'm going to concentrate here on why I think we are reaching a distribution, why we should be selling any position we are currently holding, and how we can confirm that distribution is in progress. Wyckoff is a structured way of doing analysis. It is a context-based technique. It has nothing to do with indicators or predefined waves like Elliott wave. This is totally different and flexible, based on leading indicators. In Wyckoff analysis, we use it to understand what is currently happening: distribution, accumulation, uptrend, or downtrend. If you can judge what phase of the market cycle you are in today by looking at your technical chart, it helps you decide to hold, sell, or buy. During the accumulation area, we want to know what the price of this stock was computed to be based on the second principle of Wyckoff, cause versus effect. Looking at the blue shaded box where I have done a phase-wise analysis of Wyckoff principles, phase A is the stopping of the current trend. The downtrend markdown started from a price of $29 during distribution 1 around October 2021. That downtrend stopped at $6.44 in March 2022. In phase A, we need to understand there was preliminary support at $9.74, where the volume was large compared to previous volume bars. When preliminary support was happening, there was higher volume than normal. That was the first entry of the smart money because they saw good value at that point. Then, the stock reached its selling climax at $6.44 on March 2022. Phase A stops the current trend, and the next phase is building the cause. During this phase, the stock is slowly being absorbed and accumulated by smart money. They maintain the price at a very tight range between $6 and $10 through market manipulation. A huge number of stocks were accumulated. At this time, retailers and weak hands were panicking and wanting to get out of the stock. They were selling, and smart money was slowly accumulating. Basically, they were absorbing the supply from March 2022 through almost the whole year of 2023. However, strong hands have to perform tests to check the supply before they can initiate the uptrend. The test happens at the support level where the price is pushed down further. This makes weak hands sell their stocks again, and supply can be tested by looking at the volume at very low prices. If you look at $5.92 when the stock was at an all-time low, the volume was very low, less than 100 million. But look at what was happening at the price of $6.44. The volumes were around 400 to 500 million. This clears that the supply is almost exhausted and there are no more sellers left. That is when the real uptrend starts. We confirm this with Phase D, where the price follows the path of least resistance because there is no more supply left. Any simple good news will make the price bars have a comparatively wider spread with good volume. You can see this in May, June, and July of 2023. The price was moving with wider spreads. This is a change in character. A new trend is emerging within the range, and later we have a confirmed uptrend emerging out of this range during Phase E, trend outside of the range. This is the basic structure of accumulation where we mark different contexts by labeling price action and volume. When the new uptrend started around August or September, the stock started going up from $17 towards $63 and $66. Remember, while these phases were happening, a cause was being built. With that information, we can compute the price. What would be the effect after this cause has been built? That becomes our baseline count. How high can this price reach based on this cause? In February 2024, I was updating my price counts, and very recently my last update was in May 2025. The total accumulation campaign count I computed was around the $196 to $212 range. For the whole accumulation range, the highest possible count I got was around $196 to $212. I also have a reconfirmation count for the reaccumulation area, shadowed in blue, which confirms the price is around $164 to $297. If you look at where the price touched, it reached exactly $207 at the peak in November 2025. The stock is currently showing all the signs that smart money is distributing. When we do this analysis, we also need to look at price action versus volume. On the volume histogram, I have put blue arrows to compare it with price action in the uptrend. Whenever the arrow is upsloping on the volume side, the price is also going up with high volume. In every impulse movement, we see higher highs in volume. Volume is in harmony with price action. But look at the pink arrow in 2025. There is a divergence. The price keeps making higher highs, but the volume is showing exhaustion. This means the current trend is not being supported by smart money. It looks like retailers are mostly involved in this uptrend. Whenever the price touches a higher high after 2025, at $125, high volume emerged and the price spread was too high. I have a blue dotted arrow connecting the price and volume where distribution began. Around $190. In distribution 2, the price bar and volume were very high, 600 million. Most recently, at $207, the volume is higher compared to adjacent bars. When distribution happens, this is a classical footprint left by smart money. Whenever the price touches the highest highs, there is an urge to sell, but they make sure this is not visible to common retailers. This is supported by media news, analyst estimates, and various other ways that cause retailers to buy based on FOMO, fear of missing out. This is the confirmation we are looking for. We believe there is a distribution in the near term because the target campaign profit target, computed from the cause built between 2022 and 2024, has already been reached. The effect has reached the price we computed. Next, it has to pause for some time until the price finds the next level of direction. This could be a smaller or bigger distribution count. We have to wait and see. It doesn't look like the stock has much more potential to go up. It will likely go sideways based on distribution 2, indicated by the rectangular red shadow box. This means the price will be stagnated and range-bound for quite some time. As a Palantir investor, if I'm looking at a long-term investment for 5 to 10 years, immediate action may not be required. But if you are a short-term investor and want to book a profit, or you think the price will keep going up, this is a red flag. Technical analysis shows that the cause built is exhausted and we are in distribution. Currently, strong hands are distributing their stocks. For long traders, this is the time to stop trading this stock because there is a possibility that prices could move with a high spread to the negative side. We reached end of the video. Here is my current outlook for signs of distribution. I believe we have reached distribution 2. Here is why. Price targets reached. Based on the cause built during the 2022 to 2024 accumulation, my projected campaign target was $196 to $212. Recently, the stock hit a peak of $207, hitting the heart of that target range. Price volume divergence. Throughout 2025, we have seen the price making higher highs, but volume is beginning to show exhaustion. This suggests the move is being driven by retail FOMO rather than institutional, smart money support. Institutional footprints. High volume spikes at the $190 and $207 levels indicate that institutions are likely offloading their positions to retail buyers. Strategic recommendations. Long-term investors, 5 to 10 years immediate action may not be necessary if you are comfortable with sideways movement, as the stock enters a period of stagnation. Short-term investors. This is a red flag area. With the cause now exhausted, it may be time to book profits. Traders. Exercise extreme caution. Technicals suggest a high probability of a high spread move to the downside. If you think this kind of analysis helps you and you would like to learn more, please subscribe and leave some comments. That helps the algorithm pick up this video and share it with more retailers. Thank you for watching and leave your questions and feedback in the comments. Based on that, I can post more videos and do deeper Wyckoff-based analysis in the upcoming weeks to closely track what is happening with Palantir. Thank you.